Hello? I've often noticed that beginners don't pay attention to exchange fees and don't optimize them at all. They don't lower them. However, if you know how to trade, your main losses will come from that. It's exactly the fees. I often find that when I tally up my statistics for a month of day trading, the fees eat away at my profits, sometimes even half of it. Half of my profits, meaning if they were zero, I would have earned twice as much. What to do about it? In this video, I recommend everyone to create an account on the top exchange BingX. And here's why. First of all, they have the lowest trading fees in the market. In principle, that's already it. You can save quite a bit of money every month. The more you trade, the more you'll save. And secondly, if you register using the link below, you'll get up to 30 USDT, a welcome bonus even without a deposit, separately for a deposit of up to 500 and separately for a trading volume of up to 500, but even without a deposit, it's 30. I recommend that absolutely everyone take advantage of this situation. Create an account using the link below, get a bonus of up to 30 USDT. Evaluate the exchange and the potential savings on fees, and if you wish, start trading later on. But everyone should create an account. Get the bonus now. Everyone should register on the top exchange, BingX. I recommend the link below. Sign up. First of all, let's start with the fact that I recently discovered the BingX exchange for myself. Here, the trading fees are the lowest in the market, and now I'll show you an example of how important it is to optimize those fees. I prepared a small table where you can see that if you have a balance of say $1,000 and you make just one trade a day, let's assume every day for a month. With a 5 times leverage, here are the fee levels. I marked it at the top. If you pay a 0.02% fee, you'll end up losing a total of $60 over the month. Well, let's say that each of your trades this month didn't result in either a profit or a loss. So you were losing money in some places and making money in others? Well, by the end of the month, let's say you've traded a certain volume and you still have $1,000 left. But from this, you will need to subtract the fee, which will amount to $60 if you pay. So take note that if you pay 0.05%, the fee actually increases to 15%. Balance, that's $150 in this case. However, at some exchanges I've seen levels like this, and at some even higher, where it could be a painful $300 or 30% of your account just in fees. And keep in mind that the leverage is small with only one trade a day. But if you have such a fee, then one fee alone can eat up more than half of your account. Therefore, optimizing fees is one of the main tasks for a trader. How to do this? Let's open a trade as an example. By the way, on the BingX exchange, there's this feature in the... But if you have such a fee, then just one fee can eat up more than half of your account. So optimizing fees is also one of the main tasks for a trader. How can we do this? Let's open a trade. As an example, by the way, on the BingX exchange, there's this feature in the... It's like smoke trading. So, for example, I'm opening a trade with 5 times leverage under market order conditions. What does that mean? That means I made a trade as a taker, and there are different fees for market making and market taking. So, depending on which order we use, whether it's a limit order or a market order, we'll pay different fees. And this applies to absolutely any exchange, including BingX as well. With a limit or market order, we'll pay different fees. And this applies to absolutely any exchange, including BingX as well. Let's take a look. So, I opened a long position, and there it is, plus 150 in my position. Plus that in my position has increased, which makes up the fees in my position. So pay attention, minus 250, practically at the wheel for simplicity's sake, let's say 250. But what is that, like an equivalent of $1? Yes, so if I had real money on my balance, let's say, instead of this smoke, I would currently have just under 100,000, and I would open a position with 5 times leverage. So accordingly, I would have practically 500,000 from the DT, and I would pay, well, it turns out to be $250 in fees. Why was that specific amount paid, and how much is it? Let's take a look over here. Here you can see the fee level, and notice that I just opened as a taker, and that's a 0.05% fee. Let's go back to my table and see that if I will open such a trade once a day and every day for a month. Moreover, I won't end up in profit or loss. During this time, I will pay 15% of my balance for the month. That's a lot. So, in order to break even, I need to make 15% on top of my deposit in a month, just to stay in the same place. Therefore, that's unacceptable, and you can't trade like that. So, what do we need to do? Let me close the position and show you how to open trades in a way that saves money. Simple, by limit order. How do I do it? I do this when I trade intraday on a 5-minute chart, And when I enter on larger time frames, like 4 hours or 1 day, I don't use a market order, I just go in on the smallest time frame. For example, if I want to open a trade right now, I go to the smallest time frame, like the 1-minute chart. I'm looking at the current price, which is 95,542, and I'm adding a small buffer of 500, let's say 30. I place for a limit order and wait for it to be executed. Well, let's say I want to open a long position right now. I don't just go and hit a market order. Yes, I'm specifically placing a limit order with this approach. In addition to the fact that you pay less commission, there is another advantage. You will be executed at exactly the price you specified. There will be no slippage. So, if you have a large amount of money and you're using some leverage and entering a market trade, especially on a small time frame, this will be particularly noticeable, especially with some low liquidity altcoins where you can only use a market order. You can really move the price significantly if you wanted to enter. Well, on a small time frame, especially with some low liquidity altcoins, you can only use a market order. You can really move the price significantly and you wanted to enter, for example, at one price because the prices have shifted, the average will be right here, and then the price instantly drops back down. You're already at a loss. How did that spread happen to you? The market has worked out. By the way, this method of placing orders, this way, of entering and exiting trades, can not only help reduce commissions, but also protect you from slippage. So, I opened the trade, and let's see what happened. I entered with exactly the same volume, and for that, I was paying $250. The fee is now $97, so basically it's the same either way. I opened in just a few seconds. Here, of course, yes, with a market order in one click. I open instantly. A limit order. I had to wait after all. Well, how long to wait? 3 seconds. Okay, I waited 3 seconds and saved some money. Well, in my example, if it were real money, $150 out of nowhere, already significantly. All right. And let's go back to my table that I created. Over the course of a month, with $1,000, I will save $90 this way. Well, how much does that come out to? 9% of the balance. So it's one thing when you go into the red by 6% trading. Well, with a 5 times leverage every day, that means you can easily make 6% in a single day with intraday movement. Well, excuse me, 15%. Not every trader, even those who trade profitably on a consistent basis, can show a return of 15% in a month. Okay? So here's a life hack about market limit orders. I think it's clear, and it's right there on the surface for absolutely everyone who has ever looked at the fee structure. They saw that as a maker, you pay lower fees than as a taker, and the difference is quite significant. Now the next life hack. If you have a large balance, if you're trading a high volume, the exchange there's this thing called VIP levels. You see, it says VIP 0 here, and you can read more about it. Every exchange will have something like this. Well, on Binx, for example, to reach the first VIP level, you need to trade a volume of $10 million in a month. Millions of dollars, what does $10 million mean? Let's go back to that same page and calculate it as an example. If you make 1 trade a day, that's 30 trades a month, and you're using an average leverage of 15. So, to reach a trading volume of $10 million, you need to allocate $11,000 per trade. You can play with the numbers. If you make 2 trades a day, that's 60 a month, or use 20% leverage. To reach a $10 million volume, allocate less per trade. If you use your entire balance for trading without profit or loss, you stay level. To achieve such volume, use your balance for a specific trade. Fees are calculated below. You constantly stay at the same level. Well, to achieve such a trading volume, you need to use your balance for a specific trade. Please note that the fees, I've calculated them below. They are always fixed, always stable. So if you trade $10 million in a month, then accordingly with such a fee, you will pay the corresponding amount. And keep in mind that if you trade often, well, for example, if you make 5 trades a day, right? So that's 150 trades a month. If you take a smaller leverage, for example, 10, then to achieve a trading volume of $10 million, you will need $3,000. And during this time, in this month, using a fee of, let's say, 0.05%, your fees will amount to more than your actual balance. And if you don't make the gains during this time, you'll end up in a significant loss. Well, you might even wipe out your account just from the fees. And if you're saving, if you're entering with limit orders, well, of course, you won't wipe out your account, but in any case, you'll need to make a huge profit. Well, that's how futures work. If you're making a huge number of trades and taking on big leverage, a 10x leverage is significant. Anything above a 3x leverage is already a lot. Well, accordingly, yes, you will be paying high fees. It may seem like just 0.02%, but still. The question is what? Alright, Artem, what if, well, I wanted to pay lower fees, like these for example, right? And really, I would have traded $10 million. Just barely. Now I'm going to take this number in my hands and go to trade. Is it worth it or not? Let's check. If I paid, say, not 0.02% for $10 million. Well, for example, if I had reached the BIP level and the commission was, say, 0.04, I would have saved a lot. In that case, $600 does have its place, of course it does. But if you have a small balance and you need to make a lot of trades with high leverage, to achieve that trading volume, well, of course it's not worth it, of course it's not worth it. If your balance is more substantial, you can reach the trading volume needed to reduce fees without any extraordinary efforts, without high leverage, or without making a huge number of trades. So, you need to pay attention to the exchanges you use as well as the level. What commission does the exchange offer for these VIP rates? And in any case, I always recommend looking at the maker's fee and of course using that type of trading. Moreover, if you reach a certain trading volume, some exchanges will offer you zero fees. They will offer commissions for market making, and some even offer rebates, meaning a negative commission. And I even have acquaintances who makes money from strategies that involve negative commissions. So basically, they are engaged in market making. Even if there were zero fees, those strategies would still show a loss. But with a negative commission, they can show a profit. So to sum it up, it's very important to choose an exchange with high liquidity and simultaneously low fees. If you have the choice to pay 0.04 or 0.02 for trading futures, the percentages. I mean, that's a significant difference because, well, in our example, if you were paying 0.04 and trying to achieve a trading volume, so with $3,000, for example, you would wipe out your account just from the fees. They are higher than... So, if you had a balance and you were paying 0.02, then you wouldn't have wiped out your account. Of course, fees still make up a large portion of the balance. Well, as I already mentioned, futures work when you open a huge number of trades with high leverage. Yes, fees grow, but even with leverage, your balance won't be wiped out. Over half gets consumed, assuming large trading volume. Even a 150 transactions with a 10th leverage with such a percentage of commission will not be zeroed out. Your balance is somewhat rough, a little more than half of what you eat, but I took this as an example with a large trading volume. So, if you've ever traded on an exchange, you know how hard it is to reach a trading volume of $10 million? Well, let's take a smaller amount, like $100,000. Yeah, well, that's a more grounded figure for the average beginner trader. You can play around with this thing. I'll leave a link to this table in the video description. To use it, click on the file and create a copy, because of course you won't have access to the template. Here, you can play around with the fees and the numbers. Maybe this will be useful to you. Subscribe to the channel, check out my other social media links below. Telegram, Instagram, there is more content there. So save on fees. Thank you for watching. Good luck.